Hello, welcome to another edition of Business Week, coming to you from our studios here in Lagos, the nation's commercial capital. I am Frank Omalape. Here's what's coming up in a moment. National Assembly passes 2.17 trillion naira 2023 supplementary budget, scraps presidential yachts, plus no shortage of Naira notes, CBN assures Nigerians. And finally, NDIC sensitizes judiciary on deposit insurance practice. Of these and many more are some of the highlights on the show today. Thank you for joining us. Thank you, everyone. Let's begin from the nation's commercial capital, where the Senate and the House of Representatives have passed the 2.17 trillion naira 2023 supplementary appropriation bill after third reading. Before the passage of the bill, the Senate adopted a report of the harmonized settings of both red and green chambers on the 2023 supplementary appropriation bill, as submitted by the chairman of the Appropriations Committee, Senator Solomon Olamileko Adiola. The bill expeditiously scaled readings in both upper and lower chambers. As lawmakers said, it is for the benefit of the country. National Assembly correspondent TVC Adioye and Joke Adisa has more.
Is the view of the Senate.
President Tinubu's supplementary budget of 2.17 trillion naira received speedy consideration from lawmakers at the National Assembly. They believe their unanimous decision on the fiscal document is for the good of Nigerians as it captures major economic challenges facing the country. Key components of the budget include 210 billion naira for wage award for civil servants, 605 billion naira for national security and defense, 300 billion naira for maintenance of bridges, especially the Eco Bridge, 400 billion naira for cash transfers to vulnerable households, 200 billion for seed and agricultural inputs and equipment, and 18 billion naira for the Independent National Electoral Commission to conduct the off-season elections.
Considering the fact the committee was mandated to report on the bill as soon as possible, the committee consulted with the leadership of the Senate for guidance, and the committee received input from the leadership and the relevant subcommittee, as well as the head of benefiting MDAs provided for in the supplementary bill.
The bill scaled third reading after being put to a voice vote, as it was graciously approved by the majority of the lawmakers.
Is for contributions to the Development Fund for capital expenditure for the year ending on the 31st day of December 2023. The bill is read for the third time and passed.
The appropriation bill, when it becomes law, will finance critical sectors of the economy, such as infrastructure, security, agriculture, workers' wages, poverty alleviation, and others. TVC Adioye, TVC News, Abuja.
A speedy consideration and passage of Mr. President's request for the 2023 supplementary budget. The day after it hosted ministers, INEC leadership and service chiefs, the House Committee on Appropriations presents its report, and the report was promptly considered at the Committee of Supply.
Rise to move that the House do consider the report of the Committee on Appropriations on Bill for an Act to authorize the issue from the Consolidated Revenue Funds of the Federation to the total sum of 2,176,791,286,033 naira only.
State House is 28 billion. Office of the National Security Advisor, 10 billion, 364 million, 705,353 naira.
Addressing parliamentary reporters at the end of the exercise, Chairman of the Appropriations Committee, Abubakar Bichi, gives an insight into what was approved. He says 5 billion naira allocated for the purchase of a presidential yacht has now been added to the 5 billion naira earmarked for students' loans.
We have approved that 35,000 increment. So far, we have approved about 210 billion naira for Nigerian workers, and I'm sure they are going to see that impact as soon as possible. We have increased the student loan. If you can recall, student loan was 5 billion naira in the budget, but now we have increased it from 5 to 10 billion so that our students can be able to access that facility in order for them to go to school and to be affordable for them.
The committee promises proper legislative oversight to ensure full implementation of the approved supplementary budget. Jokeyadsa, TVC News, Abuja.
And now, Central Bank of Nigeria has assured Nigerians of sufficient stock of currency notes at its disposal and dispel rumors of scarcity of cash in the banks and ATMs across the country. The Apex Bank disclosed this via a statement on its website and signed by the Director of Corporate Communication, Mr. Isa Abdulmumin. The bank explained that the perceived scarcity was a result of panic withdrawal from customers and high-volume withdrawal from its branches by other banks. The Apex Bank further assured Nigerians it has adequate stock of currency notes to facilitate business activities across the country, and that its branches are working to ensure easy operations to meet the demands of the various states. Away from there now, the Nigeria Deposit Insurance Corporation says it has paid more than 34,000 depositors of microfinance banks whose licenses were recently withdrawn. The corporation gave details of the ongoing liquidation at the sensitization seminar that held in Port Harcourt for selected senior judicial officials in the country. Senior reporter Uche Okoro reports.
When banks or other financial institutions fail or have their licenses withdrawn, it is the Nigeria Deposit Insurance Corporation that steps in to ensure that depositors do not lose their money. The Central Bank of Nigeria recently pulled the plug on about 179 microfinance banks and 4 primary mortgage institutions. As concerns grow over the fate of the investors, the NDIC says there is no cause for alarm.
We've been able to settle at least over 34,000 depositors of the microfinance banks that were whose licenses were recently revoked by the Central Bank of Nigeria. We paid over 1 billion 225 million to such over 34,000 depositors of the microfinance banks. As of it's still an ongoing process. You know, liquidation is not something you accomplish within a day.
Oftentimes, resolution of these matters require the court's intervention. That's the whole essence of this seminar, to see how the third arm of government can contribute more in helping the NDIC achieve its mandate. It had in attendance the President of the National Industrial Court and the Chief Judge of Rivers State, Simeon Amadi, amongst others.
We want to create more awareness of our activities and even the concept of deposit insurance in the Nigerian system generally. And to do that, you need to identify all your stakeholders, and the judiciary is obviously one of our most critical stakeholders.
We are hoping that we are going to discuss issues that touch on workforce within the financial sector, and then see how, in terms of the cases that come, we can speedily resolve them. I think that's the key essence of the seminar itself.
The task of boosting investor confidence re-emphasizes the burden placed on the judiciary to ensure speedy dispensation of justice.
I'm sure you are happy that the Supreme Court of Nigeria had a case on Monday, by Thursday delivered judgment. And that is the kind of thing we are talking about. So that people who have had their money trapped in financial institutions will not stay until they die before they get it. I've had cases in the past where people retired and they died without getting their money from Ponzi banks, and all their entitlements disappeared. This is the kind of situation we are trying to avoid.
The seminar also discussed the enforcement and execution of judgments against banks in liquidation as an important step to guaranteeing protection of investors. Uche Okoro, TVC News, Port Harcourt.
Well, those are some of the stories that made the headline in the course of the week. You're also watching Business Week, coming to you from our studios here. Coming up in a moment, Naira projected to trade at 850 Naira to the dollar by December 2023. So, what are the indices? Find out in a moment after this break. Thank you for staying with us, everyone. Let's get started now. The Naira will trade at 850 Naira to $1 at investors and exporters forex window by year-end. This is the position of a U.S. multinational financial services, JP Morgan, projecting that the local currency will appreciate to 850 Naira to the greenback at the forex market. The interbank FX rate has risen in recent days to over 900 Naira from 750 Naira, thereby significantly closing the gap to the parallel rate, which is now just above 1,000 Naira. Also speaking in the week, the chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, Mr. Taiwo Oyedele, says the federal government is planning to introduce new foreign exchange rules, including a crackdown on illegal currency trading by year-end. According to him, it is hoped that the move will result in the Naira closing by more than 45% gap with the unofficial rate, reaching a fair price by year-end. But the question is, what are the indices or indicators for these projections? So let's get talking. So for more insight, a macroeconomic strategist at Cadro Securities Limited, Mr. Abdulaziz Kuranga, joins us virtually now. Thank you for joining us, Mr. Kuranga. Just before we get into talking about the projections by the JP Morgan and the one coming from the chairman of the Presidential Committee, let's look at the major factors contributing to Nigeria's ongoing forex volatility and what further measures could be implemented to stabilize the currency. Well, I also do know that since the unification of the exchange rate, the Naira has recorded some level of depreciation. Talk to us about this.
The journey started from June 14th when the CBN introduced a circular saying that they are now introducing like a willing buyer, willing seller model as the investors and exporters, which is now called the Nigerian Autonomous Foreign Exchange Market. So since then, we've seen significant depreciation on the official window, and at some point between July and August, we saw the rates match together between the official window and the parallel market window. However, that is just a part of the equation. So because this is like sort of the CBN trying to remove the demand side restrictions, which we saw under the S2I of the central bank. So the CBN was just trying to remove some of these demand restrictions. However, since we saw the convergence, we've now been seeing the parallel market retracing again, depreciating significantly, while the parallel market rate continues to just dangle between 750, 850 as of that time. And the major reason for this is because liquidity in the official window was really, really tiny. So while the CBN was trying to unwind some of these demand restrictive measures, there was no measure regarding supply. How are we going to supply these markets in order to support the FX markets? Nothing of such as of that moment. And recall that the fundamentals are still really weak regarding crude oil production as of the time. So the accretion to the FX reserve was really low. So as there was no, as the FX supply in the official window was low, we saw the buyers at this window move back into the parallel market space, and that led to the pressure that we were seeing at the parallel markets. However, there was also a time when the CBN also released the 2022 financial statements, and from that statement we were saying that the net reserves was actually very, very low compared to the reported gross FX reserves. So that again stoked another pressure for market participants. Then we now saw the confluence of genuine demand as well as speculative demand now moving together in the parallel market, and at the point the exchange rate moved and surpassed the 1,000 Naira per USD mark, and as of last week and from last week it was trading at around 1,300 before now stabilizing towards the 1,150 region as of today. So the combination of low FX supply at the official window, the combination of low FX supply at the official window and significant FX demand both from the official window and the parallel markets.
Okay, so let's get into JP Morgan projections now. JP Morgan Chase and Co. expect that Naira to US dollar exchange rate to strengthen towards 850 Naira by year end. So The question is, how reliable is this projection given the volatility and scarcity that is currently choking our life out of the FX market?
It's just important to note what are the things that we are seeing regarding FX supply, since the major ingredients that we are waiting for currently is just the supplies. So once we're able to see supply, then we should be able to see, especially those that are holding this greenback for speculative and trading purposes, they should be able to be offloading. And from last week, we have some verifiable pipelines from the federal government, talking about $3 billion US from the Afro-Exim N850 repayment loan, as well as around $7 billion from the securitization of NLNG and dividends. So the government is expecting that to come within the coming weeks, according to them. So those are sort of like significant effects, inflows that we should be expecting. And if they come in, they will really go a long way in helping to salvage some of these situations, helping to clear backlogs, as well as meeting short-term and existing demand. And recently, what we've also been seeing from the CBN is that is as if they are trying to tolerate higher interest rates, particularly when you see them doing 2 more auctions in a week, one on Monday and another one yesterday. So trying to mop up system liquidity, as well as improve the attractiveness of Naira assets, while also attracting foreign investors. 1 year Momo bills that was auctioned yesterday was at a discount rate of around 17.98%, which takes it to an effective yield of around 21.92%. So it seems the CBN is also trying to tolerate higher rates. So as we are seeing improvement, as we are expecting improvement in supplies, given all these measures from the government regarding N850 repayment loan, as well as the securitization of dividends from the NLNG. If that is also being complemented by this higher interest rate increases, then we think they should be significant, at least to help in reducing the FX pressures, both at the official window as well as the parallel market window. So if these come through significantly, like if they come through by before the year end, then we should be seeing the exchange rate at the parallel markets really appreciate significantly from current levels over there. It's just that compared to what we've been seeing before, so it's just fascinating for the CBN, for the fiscal authorities to note that the measures that you are going to be doing when currency is trading at 1,300 USD, 1,300 Naira per USD, will be different from the measures that will be taken for when the exchange rate is 1,500 Naira per USD. Also different from the measures that will be taken when the exchange rate is around 1,000 Naira per USD. So as at now provides an opportunity for them to actually reduce that exchange rate at the parallel market with an improvement in FX supply, because by now, since sentiments are improving by now, if they should go again and go and rest as if nothing is happening again, then exchange rates will depreciate again significantly at the parallel market, and it will be giving them a lot of pressure in terms of trying to salvage the situation. So we think now is actually the best time to actually salvage this situation regarding FX pressures at the parallel market. So if we see this momentum from the CBN continues over the rest of the year in terms of higher interest rates and clearing the FX backlogs that we're hearing as of this morning, as well as improvements in FX supply, as well as these inflows that we're expecting from N850 Afro-Exim deal, as well as the NLNG dividend securitization. If we're able to see that's come through before the end of the year, then definitely we should be seeing the parallel markets appreciate towards the sub 1,000 Naira per USD level, and that will be favorable for us in general, because it reduces business cost, and FX liquidity will also improve by year end if these inflows are able to come through as envisaged.
So it would seem this projection is coming as a follow-up or insight on the existing government's interventions and measures which are already ongoing, isn't it?
Yes. So we're just looking at around just below 1,000 ports, just below 1,000 at least for now.
So to what extent can the CBN influence this projection, or what role can the CBN play in light of this projection to strengthen the value of the Naira?
Targeting the exchange rate is not the way to go. You rather put things in place in terms of fixing supplies, and also ensuring that demand is, you don't make demand, you don't try to strangle demand. So put things in place regarding supply, which they are currently doing. Work on the fundamentals, food oil production, inflation rates, long-term inflation rates relative to abroad inflation rates. And some of these things, work on them, and before you know it, the fundamentals will be following Nigeria, and flows that will be seen from crude oil at least over the medium term before you're now working on the diversification of your exports. These flows, they will help you in form of improving the flow of dollars into the economy. So as a result of that, we should be seeing the CBN reduce its intervention, at least perhaps over those medium term. So targeting is a no, rather put things in place to ensure supply and also don't strangle demand. Then the exchanges will find its cost, we find its true level at the end of the day.
Well, Mr. Kuranga, I do know that a lot of businesses are feeling the impact of this volatility at the moment. So what strategies can businesses adopt to mitigate the adverse effect of this volatility on their operations?
So I would just think probably at least to mitigate these volatilities over the short term, probably just trying to look inwards in terms of how you are able to substitute and do some form of substitution, some of the things that you are able to import. How can you get some of these things locally at least? And so that should be helping you at least. Then you also want to enter into some FX hedging contracts such that by the time this foreign currency, by the time they are actually moving against you, then these contracts will be able to help you. You've already hedged your contract sort of, and this will be able to help you by the time you will actually need this FX. So that should help you. So two major strategies. Try and enter into some hedging, some currency hedging agreements, and as well as try to look inwards. So try to do some substitutions. So some of the things that you're able to import, how can you find them locally? Sort of a backward integration like that. So that we think that should be helping in navigating these situations in the short term.
So I'm going to let you go, but just before I let you go, let's talk about your outlook for the economy with regards to government's intervention, targeting growth and recovery. So we do know the president in the week gave marching order to his ministers at the cabinet retreat to deliver on the Renew Hope agenda. So what is likely to change going forward?
Inflationary pressures are expected to persist over the rest of the year, and our in-house projection is that, as God was is that the headline inflation should be peaking by December at around 28.37% by December. So that means that at least we should still be seeing the inflationary pressures remain intact over the rest of the year. Currency pressures, though we are seeing some respite inside, so we still see that at least compared to where we are coming from, that pressure will remain over the rest of the year. So that is likely informing us that household consumption expenditure will remain pressured, and business investments will also remain pressured. So we think the only aspect where we've not seen some form of austerity measures is regarding the government's expenses, so which government expenditure is expected to increase, and based on the news flows that we're currently seeing regarding higher budgets, supplementary budgets, and the like. So goods will remain over Q4. However, it will be pressured relating to 2022, and that is why our full year expectation for 2022 is for the economy to grow by around 2.7% relative to the 3.1% we saw in year 2022. Inflation expected to persist. FX pressures will reduce a bit, but at least compared to where we're coming from.
Let's leave it there. Macroeconomic strategies as Quadros Securities Limited, Mr. Abdul Laziz Kuranga. Thank you for your time on the program. I'll see you again.
Okay, all right.
Well, just before we wrap up today, let's tell you that the latest World Oil Outlook 2023 by the Organization of Petroleum Exporting Countries reviews that global energy demand will soar 23% by 2045, requiring 3 million more barrels of crude oil per day every year. To achieve this, the sector investment is expected to hit a total of 14 trillion US dollars from now till 2045, an equivalent of $610 billion on average per year. Of the total investment needed, 11.1 trillion US dollars is expected to be required in the upstream sector annually, while downstream and midstream require about 1.7 and 1.2 trillion US dollars respectively. Secretary General of OPEC, Mr. Haytham Ahai, said that the recent development have led the OPEC team to reassess what each energy can deliver, with a focus on pragmatic and realistic options and solutions. Well, that's a wrap on this week edition of Business Week. Thank you for watching. I'll see you again.